Hey there, traders and aspiring investors. Welcome back to the channel, your go-to source for actionable trading education. Today, we're diving deep into a fascinating stock that recently triggered on our proprietary scanners, and it's a perfect example of why precision and strategy matter in the markets. We're talking about EDUC, Educational Development Corporation. But before we jump in, a quick but crucial reminder. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, let's talk EDUC. Show company logo / stock chart. Educational Development Corporation, ticker symbol EDUC, operates in the communication services sector, specifically within publishing. They distribute children's books, educational toys, games, and related products across the U.S., primarily through their paper pie and publishing segments. With a modest market cap of just $13.01 million, this stock falls squarely into penny stock territory, trading under $5 a share. These small-cap companies can offer unique opportunities, but they also come with their own set of risks, which is why disciplined scanning and risk management are paramount. So, why did EDUC pop up on our radar? Our scanners picked up an entry signal for EDUC at $1.0500. Highlight price on chart. This wasn't a random occurrence, it was the result of multiple powerful strategies aligning, suggesting a potential high probability setup. We're looking for signals that filter out the noise and pinpoint genuine shifts in momentum or trend. Let's break down the 3 key strategies that fired off for EDUC and why they're important for a beginner to understand. First, we had the Deuce and Kirillami, or falling channel breakout. Draw falling channel on chart, then breakout. Imagine a stop price that's been making a series of lower highs and lower lows, essentially moving downwards within a defined channel. A falling channel breakup means the price has now decisively climbed above that upper boundary, indicating a shift from bearish to potentially bullish sentiment. For EDUC, this breakout was confirmed with all its exponential moving averages, or MAs, aligning bullishly, meaning the shorter term averages were above the longer term ones, a classic sign of upward momentum building. Next, the use and fade, or long-term trend alignment strategy kicked in. Show smalls on chart. This strategy looks at the bigger picture. It confirms that all the major simple moving averages, the 50, 100, and 200-day SMA, are stacked bullishly. This means the 50-day is above the 100-day, and the 100-day is above the 200-day. This confirms that the long-term trend for EDUC is already strong and pointing upwards, and the EDUC indicator, which measures trend strength, was also confirming this with a reading above 18. This gives us confidence that we're not fighting the overall trend. Finally, the Tobo SOC, our double bottom hunter strategy. To double bottom pattern, this one's all about spotting potential reversals. It identifies stocks that have shown positive performance over the last 3 months, signaling a foundational recovery. Combine that with the Relative Strength Index, or RSI, sitting comfortably in a momentum zone between 45 and 68, and an increasing average volume, and you have a recipe for a stock that's found its footing and is starting to attract significant interest. And to top it all off, this signal was confirmed by our VWAP and EMA alignment gate. In simple terms, this means EDUC's price is trading robustly above its volume-weighted moving average, confirming that the current price strength is supported by a significant buying volume. The trend strength, measured by ADX, is above 18, and the RSI is in that healthy momentum zone of 45 to 68. This multi-factor confirmation acts as a powerful filter, eliminating false breakouts and giving us higher conviction. Now, let's talk about the hard numbers and risk management. Highlight levels on chart. Our entry signal for EDUC was at $1.0500. The critical stop loss level is set tight at $1.5423. This is where we cut our losses quickly if the trade doesn't go our way, protecting our capital. And the take profit targets? T-Pone at $1.6275. TP2 at $1.7050. TP3 at $1.7825. What makes this setup particularly compelling is the incredible risk/reward ratio of 1:10.6. This means for every dollar you risk, you stand to gain over $10 if the trade reaches its final target. That's a powerful asymmetric reward profile that any serious trader looks for. Looking at recent price action for EDUC. Today, the stock is up plus 2.0%. Over the last 5 days, it's seen a modest plus 0.1% change. But zoom out to the last 30 days, and it's up a healthy plus 3.37%. EDUC is currently 16.3% below its 52-week high of $1.08,400, but a robust 54.0% above its 52-week low of $1. This tells us it's in an upward trend, but still has room to run towards previous highs. Again, before we continue, let's repeat this vital reminder. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Beyond the strategy, let's look at the volume data for EDUC, as volume often confirms conviction. Show volume bars on chart today. EDUC has seen 106,061 shares traded. Compare that to its 30-day average volume of 55,388 shares, and you'll see a significant difference. This gives us a relative volume of 1.9x above average. What does this mean? It certifies that there's nearly double the usual interest and participation in EDUC today compared to its recent average. This higher than average volume during a breakout or upward move is a strong confirmation that smart money is getting involved and supporting the price action. Sustained elevated volume is what we want to see for continued momentum. So, EDUC, Educational Development Corporation, is a fantastic case study in how multiple technical signals can align to present a high probability trading opportunity. From its falling channel breakout to long-term trend alignment and a double bottom setup, all confirmed by robust volume and indicator gates, this stock provided a textbook entry signal with an outstanding risk-to-reward profile. Keep these principles in mind as you analyze your own trades. If you found this breakdown valuable, please hit that like button, subscribe to the channel for more in-depth analyses like this, and let us know in the comments what stocks you want us to put under the scanner next. Happy trading, and I'll see you in the next video.